All right, all right, right. Let's get rid of that. Okay. All right. What's going on, guys? How you doing? Like I said before, I want to do more live sessions like this because number one, I enjoy them. Number two, it will give me an opportunity to answer questions that I'm getting from all over the place right now. And so it's kind of killing two birds with one stone, if you will. So let me know if you can hear me clearly. Also, please do me a favor. I had a little bit of feedback on the last live that I did. The audio was clipping, so it was coming in and out. So if that happens on this one, can you please let me know in the comment section? I literally have had a replacement for the new one that I bought. So this one literally arrived this morning. So it should be okay. I think I had a faulty microphone the last time round. So hopefully this is going to be good. But anyway, I thought I'd take this time to answer some questions from people. It is midweek. I've got a video coming out tomorrow. We're going to be looking at having a conversation around the stock market, so on and so forth. I won't give too much away, but you'll find out tomorrow. And we also have the live Q&A on Sunday with Stephen from over at Marketplace Superheroes. So they are the Amazon FBA specialists. So let me just give you a brief background to that if you don't know how that came about and why it's an important thing that I want the channel. So I started this last year. I started this just as, everyone was going into lockdown. Well, actually, I started it in January, but not really knowing that we were going to go into lockdown. So this channel has grown as a result of that. And obviously, because we talk about investing, you need to have disposable income in order for you to invest. You can't invest money that you don't have, right? So I've been really, really conscious that whilst I'm talking about investing, I'm talking about, encouraging people to invest. I do need to be mindful, and it's always been the back of my mind that I want to help people also be able to generate additional sources of income or side hustles that could act as seed money for them to invest. So one of the things that I wanted to do was have a look at Amazon FBA. In fact, Marketplace Superheroes approached me, I think it was in October or so last year. And so there were a ton of meetings, tons of emails have gone back and forth. They were on the podcast this week. They're on the video this week. We're going to do a live Q&A on Sunday. And really that is just enabled to make sure that we're able to present something that if people feel comfortable, if it's something that they have been considering, they have a reliable, reputable source to go to help them on their journey. One of the reasons why I kind of said yes to Marketplace Superheroes was because, number one, they're not an American Amazon firm. Like, I find that Amazon FBA as a subject can be very, very, it fills you with skepticism. It definitely fills me with skepticism anyway. And the first time I spoke to the guys at Marketplace Superheroes, I was like, okay, cool. These guys are a little bit different. They're in Ireland, number one. So that's a huge, huge difference. They're not coming at it with that American mentality of it's all about how much money you're earning, that kind of stuff. I hate that kind of rhetoric. But they're very much about, listen, it is about hard work. It is possible for you to earn X amount per month, but you have to make sure that you do the work and you put the things in place in order you to get to that point where you can earn that amount of money. So that's the reason why we're doing the collaboration with them. But like I said, there have been questions on the video from Tuesday. They will be around on Sunday at 9:30 answering questions live. So by all means, come along and ask Stephen as many questions as you want. There is a lot of free content on his channel as well. So feel free to check those out. So now that's out of the way, let's see what questions we have. All right, there was one of them, I think, that was submitted before we went live. So it's not actually come through to the live feed that I have right here. So this is from Food Dweller. How are you, Pete? I'm good. Fidelity versus Vanguard. Which of these brokers is best for ETFs and index investment in the UK? They're both really, really good. I think Vanguard has probably got a price advantage over Fidelity. Not that much, though. But I mean, typically, if I'm doing coaching with people and we're trying to explore index funds or ETF specifically, I typically go Vanguard because Vanguard is just very, very easy to navigate. They've got quite a good range of ETFs and index funds as well, and easily and nicely presented. So Vanguard, but Fidelity is still very, very good. If you're going to do a comparison, though, and that's what I would recommend that you do a comparison on obviously what's available in terms of the range, then also do a comparison on performance. Although performance is no indication of future performance, past performance is no indication of future performance. Do a comparison on that and also on cost. Cost is a big one. All right, let's see what else we've got. Okay, trading 212 for people that don't live in the UK. It is available in Europe. It depends where you're from and where you're at, though. The closest alternative that is available in the most amount of countries outside of the UK is probably eToro. I think they're available in like 130, I think, something like that, 130 countries. So they're a really, really good one. They are different to trading 212, though. I mean, you're not going to get a free share, number one. And if you haven't already got a trading 212 account, Kiki, you're not going to be able to open one because they're still not opening new accounts as far as I'm aware right now. So eToro will probably be your best bet if you are outside of the UK currently. What I will do, though, let me just grab a link. You can go check out eToro. I've done a couple of videos on them as well, by the way. So if you do want to fact find about eToro, then definitely check out some of the videos that I've done. Great thing about eToro is you can buy stocks in there, and you can also buy cryptocurrencies, which is one of the reasons why I like them, because I've got some crypto with them as well, in addition to stocks. And just being able to have those two things in one place, for me, has always been very, very useful, because I've had my crypto all over the place, and it's just a nightmare to be able to manage a lot of the time. So if you're the kind of person that wants to also invest in crypto, then maybe that is a good place for you to start as well, because you can get everything in one place. They've got the copy trading feature, which I did cover on my last video, I think about 3 weeks ago or something like that. So if you just wanted to invest, but you wanted to copy someone who's a little bit more experienced than you are, you also have that as a possibility with eToro as well. So they do have some really good advantages and stuff, but I would still strongly encourage you to make sure that you know exactly what you're doing, really, to be honest, because as with all things, you've got to manage your downside risk. So please just bear that in mind. But I will pop in there a link to eToro if you just want to go check them out. You can use that link there, and also just check out the review videos that I've done already for them. Cool. Right. Your follow-up there was, is it a good option? Yeah, I mean, if you're not in the UK, then yes. What's up, D-Block? How you doing? Moten, I'm good. I'm good, mate. How are you? Hope you're well. All right, okay. Let's have a look at this one from Walter. Hey, but getting my question in early. I've used your Trading 212 referral to get a GIA capped ISA. Do I need to declare CGT, capital gains tax, if I don't reach the 12,000 earnings in the year? If you've done it, okay, you've capped ISA. What do you mean, mate? Just let me know. I'm a little confused there. If you've got a general investment account, then you are going to have to declare your capital gains. You have to declare capital gains according to HMRC. It's a requirement. It's a HMRC requirement. Your capital gains allowance is 12,300, I believe it is. So you should report it. If it's less than 12,300, you have no tax to pay, but you do need to report them. If it's in an ISA, though, then you don't need to report anything because it's completely tax-free. I hope that makes sense. I've had to work all the way through, so I'm earning so I could invest. I didn't have anything else to spend my money on. Drago is actually a member of the group as well. Welcome, mate. Hope you're well. So, John, can you ask a question? Yes, you can, John. Okay, let's have a look at this. I've been given 50K from a successful relative. Lucky me. You are lucky. Well done. What should I do with it? Never had that sort of money before. Okay, so there isn't just one answer to this, mate. What you should do with it is really down to your personal circumstances. Uh, I could give you like I could give you a number of answers here, but it really depends on your personal circumstances. Typically, this is stuff that I would do on one-on-one coaching, and weigh up pros and cons of all of the stuff that I'm gonna pretty much list off now. Some people, if they get money from a relative, if they've got a mortgage, they may be considering to pay down the mortgage. And funny enough, I had a conversation with another YouTuber literally just before I came on this. We were talking about the pros and cons of paying off your mortgage early versus investing in the stock market. The reality is that there is one way of looking at it where you follow the numbers and you do what the numbers say makes sense. There's also the other argument to this where you don't follow the numbers and you do what you feel is right. So whether or not you have a mortgage, I don't know, but that could be an option. The other one could be, debt. If you've got debt, is the money better paying down your debt so that you can actually move forward with zero liabilities whatsoever? Believe me, it makes a world of difference knowing that you haven't got personal loans or credit cards or car finance or anything like that to pay for. It actually frees up the money that you get on a monthly basis in order to be able to build for the future. So there's that. You could obviously clearly invest the money. The question of where you invest, how you invest, where you begin, which providers you choose, how you ascertain your risk profile, that also becomes a big conversation to have. Again, I normally do this in coaching with people to ascertain where you should go. What you should do really depends on what you feel would best serve you. Like I say, money is a tool, life is for living. What does that 50K do for your outlook in life, be that in the short term or the long term? Once you know what that is, then you will have an idea of what your options are. Then you can narrow down the options. So I've just spitballed like 3 things. I don't know how relevant they're going to be, John, but just a couple of things for you to consider. Hope that helps. If not, let me know. All right. Okay. I'm not sure I'm going to be able to answer this. I've had shares in Travis Perkins. They had a demerger with Wix today. I didn't get anything for my share. Should I expect something from Trading 212? I don't know, mate, because I can't say that I'm aware of the situation. So it may or may not affect your shares. It depends on how they've actually done the demerger. So I can't really comment without you knowing. What I would say, though, is just wait and see if you get anything from Trading 212. Unfortunately, you can't ring them and actually ask them a question. If you're with people like Hargreaves Lansdown, you pick up the phone and be like, listen, this happened today. What does that mean for my shares? You're not going to get that with Trading 212. So it's hard for me to say, mate. Sorry, I don't have an answer for that, mate. Sorry. Okay, for someone who's starting out in stocks and shares, where would you advise best to start? I need a little bit more context on that, really, to be honest. I'm assuming you mean investing, okay? Because obviously we talk about investing here, so I'm sure that's what you mean. If you're just starting out, then you need to decide whether you have the stomach to go and invest in individual companies yourself, or whether you would just rather go and invest in things like index funds or ETFs. You need to understand where you fit in terms of the options available to you right from the get-go. So if you don't know that already, you need to do some research on what investing in individual stocks means and what investing in funds and ETF means. There are videos on this channel that will help you with that. That will be my first place to start. Once you've identified which one you want to go into, then it will be down to you to then decide, okay, so, and try and find out, right, what level of risk are you willing and able to take? So, how do you feel about loss? Because you can lose money in the stock market. Portfolios are down right now. A lot of portfolios are down. The tech sector is just taking an absolute beating. So how do you feel about it? And then you're looking at tailoring your risk and trying to diversify that risk as much as possible, whether you're buying index funds or individual shares. If you're buying individual shares, you've got more of a consideration around how you're going to do that. So it's all going to be about what companies you select, what companies you research, why you're picking them, whether you're going to go for highly speculative companies or you're going to go for some of the more established brands like Coca-Cola, Johnson & Johnson, Procter & Gamble, all of those brewing companies that are not in the news. You need to understand that. You need to understand how you're going to actually build something that is going to give you a relatively solid foundation. So that's will be my points on where to begin. I hope that makes sense. I'm conscious of whether that actually makes sense as I'm just replaying that in my head. But hopefully it does. If it doesn't, let me know. Pop in a follow-up question or something. Okay, this is a good one. Okay, so this is exactly what I was alluding to. I've just started investing in stocks, but all my stocks are in minus. What do you suggest I do? You have to hold the fort. Do not sell. Look, this is where, and part of the video tomorrow is going to talk a little bit about this. I think a lot of people started to invest, over the last, 12 months, maybe even 2 years. A huge flux of people started to invest over that period of time, and unfortunately, um, social media hasn't been too forthright with the conversation of, by the way, markets will go up, markets will go down. You're investing hoping that you're going to make money, but you have a 50-50 chance that you're going to lose money. So how do you stack the odds in your favor that you make money and not lose money? Although you can't completely eliminate um, the chances of you losing money, but you can mitigate it. So if you're looking at your stocks and they're all in the minus right now, don't panic. I know that that's counterintuitive to say. I know that, and it's not nice to look at all of your stocks being in the minus right now. But you got to recognize one thing first and foremost: whether you're making money on paper or losing money on paper. So if everything's in the green, that's not real until you cash it in. The same thing applies if you're in the red. It doesn't apply until you cash it in. So at the moment, it's just there on a computer screen. It's there on your phone. It's down. Yes, that is true, but it's the loss is not real just yet. So hold fire. Things will come back. It's just a question of when. We don't know when, and that's the challenge. We don't know what the market is ever going to do. If we did, we would all be trillionaires and gazillionaires. So you kind of just have to sit tight, don't panic, and just hold your nerve. Hopefully, you've invested money that you can afford to just leave in there for a period of time, but just sit tight and just hold your nerve. What's my opinion on Lucid? I don't really have an opinion on Lucid. I mean, I wouldn't buy CCIV. I know many people who would. It just doesn't float my boat. I think they haven't got a product just yet. They're not selling any units at all at the moment. They're talking about battery range or ranges that in 2 years' time other automakers will probably eclipse. I just think that for what they're promising today, based on the share price today, for 2 years or 3 years when the car's going to be delivered, I think is going to be outdated. Yeah, sure, they could, adjust those numbers and stuff like that, but that's very hard to do. Especially retrospectively in view of the future, if they already begin the production run for the vehicles. So it doesn't float my boat. I've not invested in it. It doesn't mean that you shouldn't. I know plenty of people who have invested in it and thought, this is going to be a great investment. But I think specifically on when it comes to the SPAC arena and all of the SPACs that we have seen, you have to recognize that all of these are speculative plays. They're very, very speculative plays. I don't like using the G word, but you are gambling. You are gambling that these guys are going to get it right, having only, been able to demo a car. Don't even they could even do that, really, to be honest. So it's not one that I would put money in. I would need them to, have a car that's selling, and at least and I don't care whether they're making profit. Is they're just selling the cars, that's good enough for me. Neo, they're selling the car, they're not making profit. Tesla for years sold the cars, didn't make any profit. For me, they would need to be selling the cars for me to be interested. And at the moment, they're just not. So it's not for me. But that doesn't mean it's not for you. Let's have a look. if you're willing to take the risk and you believe deeply in a stock, does it make sense to buy a CFD on the stock instead of normal investing? You need to understand how CFDs operate. CFDs are generally leverage. You normally leverage with a CFD, and you will be taking out a contract. It's not like owning the stock, mate. So you need to know the difference between the CFD and actually owning the stock. With a CFD, you're taking a contract for difference. So what you're essentially saying is that CCIV, as the example, you're going to take out a contract over X period of time, believing that the share price is going to be up or down. And you will likely leverage that, possibly. I mean, you can do it without leverage. I personally wouldn't. That is a high risk strategy if you're going to take a CFD. That doesn't mean that you should, but it's not something that I would ever do, because I would rather just own the company. I would rather just own the company and have the shares sat there, in opposed to taking out a contract which is going to expire at some point in the future. And then you find yourself even more exposed to the risk that if you get it wrong, you've got to pay up. And then your losses are consolidated. You don't have the option of just holding it until it comes good. No, with a contract, there is an end date. So you have to sell at a particular point. So if you get it wrong, you're out of pocket. If you've leveraged the CFD as well, then you're doubly out of pocket as well. And you'll be charged fees on top of it as well. So for me, you would need to really understand how CFDs work. CFDs are not for the faint-hearted. They are for people who understand how it is. You may know how they actually work. Not something that I would do personally. Jack, okay. How much of my net worth should I spend on a mortgage? Net income, sorry, that threw me for a second. I thought net worth. Net income should I spend on the mortgage? Well, typically your net income should be calculated after your mortgage payments. That's how it typically works. So it's not about how much of your net income you should be paying to a mortgage. The mortgage isn't calculated on your net income. Your mortgage is calculated on your earnings, and then you go through an affordability calculator, which will then decide whether you can afford the mortgage in theory, essentially. So yeah, your net income is normally calculated after your rent and your mortgage payments basically come out. It all really boils down to what you can afford. Number one, from a deposit point of view. Number two, from how much you earn. And number three, from what the monthly cost is going to be versus what you earn, if that makes sense. Let's have a look. Okay, Kiki's just saying that you're in Norway, Kiki. What's your opinion about YouTube colleague and their opinion about stock market and how competent they are to give advice? This is a good one. If you're in Norway, I'm pretty sure eToro is available in Norway, so you will be able to use eToro in Norway. I'm pretty sure. I think Trading 212 should be available in Norway as well, but they're not opening new accounts right now. In terms of your question, what's your opinion about your YouTube colleagues and their opinion about stock market and how competent they are to give advice? I don't think anyone should be giving advice here on YouTube. I mean, like, what I do here is I provide guidance, I provide context. I think that I am uniquely qualified to give you context. So basically, one of the big things, the reason why I came to YouTube to do this was because what is missing a lot of the time is a lot of content. People will do keyword research and just make a video on whatever the buzz story for the week is, right? But they don't then give you context. So for example, one of the biggest sayings that I absolutely hate on YouTube is cash is trash, right? Nice bit of catchy content, right? But what's the context around that? Actually, sometimes you do need to hold cash. Sometimes cash is not trash. Cash is actually king. But in what context is it king? In what context is it trash? So I think on YouTube, what I'm able to do here is give my view of how things work based on my experiences. And when I answer questions, give you a little bit of context and nuance around why I give the answer and some things for you to consider if you're going to do further research. I always tell people, don't just listen to me. You probably do need to gain 2 to 3 different opinions, but take every single one of them with a pinch of salt and form your own opinion based on what you've heard. Because yes, I can talk about, ISAs and investment strategies from a professional point of view, having been a financial advisor myself and worked for investment houses before. Yeah, I can give those answers. I can give you context and nuance, but ultimately you have to take that information, digest it, understand it, and form your opinion based on what you've heard from me and a source of other people. Now, do I think that other people are competent to give advice on YouTube? I don't think anybody is competent enough to give advice on YouTube, and I will put myself in that category as well, because guess what? You should not be taking advice from any YouTuber, including me. You should be using me as a barometer to do further research to form your own opinion. In regards to them not necessarily being qualified, I think you have to try to understand where the person is coming from. I think sometimes people just make videos and they just Google something and they just regurgitate what they see in Google. I think those people you can easily spot. I think there are other people who are on a journey on YouTube where they're learning themselves and they're trying to share. That is great. You should take encouragement in the fact that there's someone like you or on a similar journey. He's showing, or she's showing their mistakes, what they're doing, that kind of stuff. But again, you need to take it with a pinch of salt. For the minutia detail and the nuances, the context that does matter, that's where I believe that my voice shines a little bit lighter than others. But I think for the context of YouTube and advice, don't take advice from anybody on YouTube, not even me. Use us as a source of information for you to do your own research. That's what I would say in regards to that. All right, guys. How many we got? We got 60 on here at the minute. There's 17 likes on here. Please help me out with the likes, guys. Let's get that up to 30 actually, because we just need 12 more. There's more than enough of you on here to get it up to 30. That will really help me out and make the time worthwhile as well. Right, where are we? This is a good question. Okay. For someone in the UK, do you think investing in US stocks is better than UK stock? The US is the biggest market in the world. That's where all the big companies are. That is essentially where all of the tech giants are. Most of the dividend aristocrats are also in the States. So you cannot ignore the United States. You cannot ignore that market. Like, you just can't. So it's not whether it's a good idea or not, it's a necessity. You have to be invested in the US stock market in order for you to get decent returns. The UK market does have its own challenges: Brexit, inflation, interest rates, all kinds of stuff is going on, but you have to pay attention to the largest market on the planet, which is the US market. So if you're not holding US stock, you're definitely missing a trick. Right, let's have a look at this one. If you set a limit, buy and sell or stop during the US market hours and the stock goes below or above your limit, will it trigger on 212 though we don't have market access? You can't trade on 212 outside of market hours. So whatever order you put in will only trigger when the markets are open. So if you put a limit, say for example, that you don't want it to execute or sell over and above a certain amount, and it goes over, then that won't trigger. So yeah, I hope that answers the question. As it goes below or above your limit, yeah. So your limit will have to happen whilst the market is open, because trading 212 will not allow you to trade pre-market. So whatever limits you set, it will only be executed when the market is open, if that makes sense. Well, let's have a look at this one. I'm trying to buy an S&P 500 ETF from Vanguard, which costs about $60, £60. But Vanguard, at the opening of the account, ask at the field of the single payment, at least 500. Yeah, because there are minimums, Mikkel. So to open a Vanguard account, you have to have £500 as a lump sum, and you have to have £100 as a monthly amount that's going in. Those are their minimums. You can't just invest 60 quid with Vanguard. That's not how they work. If that's what you want to do, then you need to be looking at the likes of free trade, but you're not going to get I don't think they have the S&P 500 ETF within free trade. I'm pretty sure that they don't. You might get it. I don't even know if you can get it within Trading 212. If I'm completely honest, maybe have a look at those two. But yeah, Vanguard have their limits. Minimum is £500 to open the account. You need £100 per month going in. Phantom is saying here, okay, they will only trigger orders in when the market is open, not pre, not post, when the markets are open. This is a good one. Why do you think Tesla stock is going down considering they just had a good report? I think it's going down because they are now looking at, or at least Wall Street are trying to assess how Tesla is going to do based on all the new competition that are coming out. And the fact that a lot of this stuff is already priced into the stock price as it is. I mean, it's massively overvalued when you look at the fundamentals for Tesla right now. A lot of that has already been factored in, and that's the reason why, even though they have had a really good report, and I was hoping that they would bounce, but it isn't a surprise that the Wall Street guys have been like, actually, you know what? This is what we would expect. Tesla has to get a lot right to justify their share price. I was hoping to see a little bit of a bounce because I'm participating in a trader v trader exercise, but it just didn't happen. The sentiment wasn't there. So I think that's the reason why, it's going a little bit down at the moment, because there's a lot of competition coming through, and there's a shortage in chips. They had to stop Model S and Model X manufacturing for a while because of the shortage of chips. And then with the Model S and X, they're also redesigning the interior altogether. So they're starting from scratch. So they're not even producing the S's and the X right now. And those are the premium ranges that bring up the average price of the cars coming through. So all of those things have meant that the analysts have looked at it and think, we don't like it right now. And that's why we're seeing the sentiment kind of ease off with Tesla. Is it still going to be a long-term investment? A good bet? I believe so, yes. But that's my own personal conviction, regardless of what the fundamentals say, because Tesla for me is almost like a little bit of a passion buy as well, because I have a Tesla. I've driven one for 5-6 years now, but I cannot still get away from the fact that even now the fundamentals look even more and more ridiculous regardless. And I was saying to this again on the panel that I was on just before I started this live, that for me personally, I don't really mind if I make a little bit of a loss on Tesla, because I'm fully bought into the cause and what Elon's trying to establish and trying to achieve here. So you have to look at it from a pragmatic point of view. If you hold it, do you still believe that the numbers stack up? Do you still believe that it's a good buy? Do you still believe that they're going to have market share? I was reading something literally day before yesterday. They were saying that in order for Tesla to continue to have to be able to validate its valuation, it needs 40% market share of the global EV sales. And that is with all of the competition that is coming in. Many people think that is highly unlikely. I still err on the side of optimism purely because of advances in battery tech. They are leading that. Supercharging network, massive advantage. There is talk that Elon wants to open that up to other car manufacturers. If he does, in my opinion, he's going to lose his strategic advantage. So I don't know why he would do that, but Elon's Elon. He might have a brilliant plan elsewhere. I'm still optimistic that he will, but for other people, they believe the contrary to me. So I think you've just got to ask yourself whether you think it's still a good buy and whether it still holds to your own personal conviction around the company. This is a good question. As a kid 16 with no skills, what side hustles do you suggest that are popular at the moment? I'm open to paying some money up front to teach myself the needed skills to do these hustles. See, it really depends on because I'll say if you're 16, you have the ability to kind of experiment on the kind of things that you enjoy. And that will probably be the things that what I would ask you. What do you enjoy? What do you enjoy doing? Because at 16, I like that you're thinking about side hustles and earning money, but at 16, I would be trying to, and this is one thing that I wish that I could go back and do, explore the one thing that I enjoy doing, and maybe invest in money into how I could turn that into a side hustle, if that makes sense. So what do you like doing as opposed to what is popular right now? The thing is, if anything's popular right now, it might not be popular moving forward. So what you find out is that you invest money or to teach yourself a particular skill, but that skill is irrelevant in like years time. And what do you do? And it could be time wasted. It isn't to say that that's exactly what will happen, but it could happen. So at 16, I'm asking you, what do you like? What do you enjoy? What passion do you have? There's something in particular that you like, then I will try and explore so you could turn that into a side hustle. Pete, you said that you were regretting the Cash Effects video. I'm sure that you have good reasons, but it opened my eyes on the importance of due diligence and not looking only at returns. Promise. Thanks. And that's good to know. The reason why I kind of regret doing that first video is because of the just sheer negativity. Like I'm telling you right now, it's like a cult up there. It really, really is. It's like nobody can say anything contrary to what they're being told. And like, I'm not the only one on YouTube who's saying these things. And, you know, I guarantee you this, any YouTuber who is singing their praises, go and have a look at their referral link. I guarantee you they're making money off anyone who signs up to their link. That's what they wanted me to do. And I was like, no, because at the end of the day, it doesn't stack up to me. And I'm not going to recommend something or put links in my bio for people to go and use it if there is a possibility that the company goes bust. I mean, they literally had another regulatory warning out today, which makes them 18 regulatory warnings globally. 18. You ask them the question, they do not have an answer for it. Their answer is, we don't need to be regulated. No, you do, unfortunately, because you are taking customers' money. And I had an email from someone yesterday who found my channel because of the Cash Effects video. He was asking me about how to invest. And he said, listen, they're giving me this FCA number. The FCA number they give you is EverFX, who is their apparent broker, even though EverFX say that they don't deal with them, but then they do, but then they don't. So that's on the rocks and it's unclear, it's opaque. But they need to be regulated because when you open your account with them, you send them Bitcoin. That's called handling client money, which means that they need to be regulated for that. So any company entity that takes client money for investment purposes has to be registered by the FCA. And the reason why they need to be registered with the FCA is because if said company goes bust due to mismanagement, poor financial accounting, whatever reason, at least, number one, the FCA is able to do all kinds of checks on them to say, you must have X liquidity for the amount that you hold for customers, right? Which means that if they go bust, you've got a means for recourse. They have to put money aside. Plus, you also get the protection of the Financial Services Compensation Scheme. All these things they say they don't need, but they do. And I know that they need it because I've worked in financial services for 15, 16 years, but the cult don't want to hear this. The cult just follow whatever they're being told. I think more and more people are waking up though, because I've had so many emails over the last 2-3 weeks of people just saying, you know what, this is nonsense. And they're asking the questions and the messages in their Discord groups or their WhatsApp groups get deleted. People get kicked off. So more and more people are waking up. And in hindsight now, whilst I regret the first video, I'm glad that it's got us to here to have these conversations where people are asking questions. That's all I'm asking people to do. Ask the question. If you feel satisfied with the answer, fine, you carry on. If you don't, then at least you can kind of be like, maybe I've dodged a bullet here, and you don't do something that you may later on regret at the end of the day. I'm not the only one who's talking about Cash Effects and the fact that it is proper dodgy, and it just doesn't seem to stack up. But they're doing all they can at the moment to rebuff, and without sounding too big-headed, and I don't mean it to come across like that, it's two really small YouTube accounts. They don't like me, number one, and I'm relatively small when it comes to the YouTube channels in general. And Ru's the other guy who was on a live with me maybe 2 or 3 weeks ago. We need to do another one, who's really doing exposés on them, because he's in it. He was in it much longer than I was, so he's got a real good inside view. And they're trying to rebuff some of the stuff that he's saying, like showing, on their phone a trading screen. It's like, well, that's not proof that you're trading, mate. Like, this isn't kindergarten. Like, you need to come up with some proper evidence if you're going to do it, to say that you are trading. They keep using this Joe Jardinsa thing, like, oh my God, yeah, he's a billionaire. Why would a billionaire invest? Like, not being funny, one of their members said it best. If you're happy to open up the doors and show the billionaire that you're legit, why not just show the people that are paying you, who are your members, to allay their fears that you're not a scam? But they won't do it. You've got to take the word of a billionaire, because the billionaire has the best intentions. Now, without breaking any china in the china shop, billionaires don't become billionaires because they're very nice people. Billionaires become billionaires because they are ruthless and they have a ruthless streak. Nobody makes that kind of money without having to make really difficult decisions that often sometimes will disadvantage somebody else. Let's not get this twisted. Okay, so taking the word of a billionaire because he's a billionaire does not mean he has your best interests at heart. He may want to give back now that he's a billionaire, but is he really wanting to give back to you? That's the question. Anyway, I could talk about that for ages. There's a follow-up here. The same thing applies, Jack. Like, your mortgage is dependent on your income. So basically, if you earn 500, if you earn it 50K a year, right? Typically the number is 4.5. You might find some that will go up to 5. So they'll say maximum you can borrow is £250,000, right? Your mortgage payment over a 20, 25 or 30 year period will equal X. That's nothing to do with your net income. Okay, it's all about what money you earn per year, and then whether you can afford X payment based on how much you're borrowing, what deposit you have, and how long you're taking the mortgage. It's not about your net income after tax. It's about what you earn before tax and your affordability for a mortgage application. If you're trying to get to the question of how much of what you earn should you be allocating towards your mortgage, well, that varies depending on where you live in the UK. I mean, in London, for example, rents are really, really high. So some people are paying over 50% towards their rent, 60%, some people 70% in some places, right? It really depends on where you are in the country. Some people are able to get it down to like 30%, 40%. It really depends on your personal circumstances. Would you consider having an ETF as part of your stocks and shares ISA, and any recommendations of ETFs? I don't have any recommendations of ETFs. You need to do your own research on those. But you can have ETFs as part of your stocks and shares ISA. Yes, you can. If you go to Vanguard, any of the options that you see within Vanguard, you can have within an ISA. So yeah, you can have an ETF as part of your stocks and shares ISA. I don't recommend ETFs because you need to pick the right ETF for you. Where do you want to invest? What's your risk tolerance? All that kind of stuff comes into it. I'm not going to say go and buy this ETF because it might not be right for you. Here we go. Hey, buddy, this is the new guy from the charging station the other day, 215. Yeah, mate, I do remember you. I have a couple of stock questions. Let's go for it, mate. Let me just see if I can find you. Right, this is the first one. Any thoughts on context logic? I haven't looked at it. I have not looked at it, so I can't give you a comment on that. Let me have a look and see if you had another one on here. One second. Yeah, I've not looked at them, mate. So in order for me to give a thought, I'd need to have a look at the company, what they do, how they're making money, whether they're profitable at the moment. I need to have a look at what they're doing, what space, what competitors they have, whether they have any strategic advantages. Have a little look at their accounts, maybe, to see how profitable they are in terms of are they on track to make profit? Are they currently making profit? Are they paying dividends? Do they have dividend cover? There's a lot to have a look at. So I can't give you an answer without having a look at the stock specifically. But if we do bump into each other again at the supercharger, then just let me know. I'll tell you what you can do is if you find me on Instagram and ping me a message on there, I'll drop you my number. You can just text me or something, because you're literally around the corner from me, so we can talk offline. Right, let's have a look at this one. Is investing in a single fund a good idea? For example, I'm thinking Life Strategy 100. Should I be concerned about this fund not having shares in China market? Will I be missing much? The question here will be, why do you want shares in the Chinese market specifically? You may have a really good reason for it, but I have to ask. Look, you need to understand that within the Life Strategy funds, you are predominantly going to be invested in a collection of ETFs. Now, you say you don't have any shares in the Chinese market. I'll be surprised if that is true. You will probably have exposure to emerging markets, which should include the Chinese market. So whilst it might not say that on the tin, because within the Life Strategy 100, it's all ETFs, Vanguard ETFs. What you need to do is go and have a look at each of those ETFs to see where you have exposure globally. I'll be very surprised if you don't have anything in the Chinese market, because it will be a globally diversified fund. Do you need to be concerned? Is it a good idea? The Life Strategy 100 is a 100% equity fund. So if you are investing and your natural attitude to risk, or risk that you're willing to take, is a medium, then that may be way too high for you. You really need to be an adventurous person to be going that way. But then again, things like time horizon does come into play. It's just worthwhile knowing that in that 100%, equity fund, you are going to have a lot of ups and downs. It will be really, really volatile. So you just need to be able to control that mental, emotional side of investing, of your reaction to seeing a down market, and just basically sit with it, hang tight, and just let the markets ride out. If you're investing for, anywhere less than any less than say 5 years, then I would definitely question whether it's a good idea to be in that fund. But yeah, it is a 100% equity fund. You should have access to the Chinese market. But like I said, you need to go and have a look at each of the individual ETFs that it's invested in to get the global exposure. Yeah, mate, people have got massive shorts against Tesla, like they have done for years and years and years. So that's always going to be the case, I guess. So I mean, even with the whole news about the whole death in Texas the other week, I think it was last week or something like that, and like no one deserves to get into an accident and die, but it turns out that, number one, they thought the car had a full autopilot. There was nobody in the driver's seat. You can't be irresponsible with this kind of stuff. Like, you have to be really, really mindful of it. And it didn't help that one of the, I think it was Consumer Reports, was saying how you can trick the Tesla autopilot system. It's like, how irresponsible is that? Like, when you buy the car, they tell you, if you engage autopilot, you still need to be paying attention. It doesn't mean you can jump in the passenger seat or in the back seat and just hope the car's going to do its own thing. Like, no, it's not. The technology isn't quite there just yet. They're still developing that to perfect it. But yeah, people have always had a short against Tesla, and that will always be the case, I fear. If someone wanted no hassle investing with Vanguard, would investing in just the VUSA and the VWRL long-term be wise? I'm a bit cautious of wanting to invest in single stocks given the volatile nature. Yeah, I mean, both of them are really, really good. The VUSA is the S&P 500 ETF, and the VWRL, I believe, is the FTSE All World Developed Markets, I believe. I don't know, I could be wrong. It's one of those ones. But yeah, I mean, you're going to get mass saturation, mass diversification, which is good, which is what you need. invested in the case of the S&P 500, I think it's 505, 507. I think with the VWRL, I think it's over 2,000 stocks, and it will be globally diversified. So, yeah, I don't think that it'll be. I think you'll be okay in that. I do think that you'll be okay in that. I just, make sure that you're happy with what you're investing in. Make sure that you understand where it's invested from a global point of view, particularly for the VWRL. Yeah, and if you're happy with it, you should be fine. It's definitely going to give you a smoother ride, one would argue, than buying in individual shares, individual stocks themselves. You're at least buying a basket and not just one thing. Have you ever considered stocks in the UK that pay dividends? I've searched your videos on any suggestions, and apart from the individual stocks, which others is in a way to invest in long term? There are lots of dividend paying stocks in the UK. So if you just Google that, I don't have any videos on UK dividend stocks. Maybe I need to do that. Actually, I'll take that down as a number. But there are dividend paying companies in the UK. So there'll be lots of them that you can Google and find specifically. And why is US stock not paying dividends? They are paying dividends. You just need to search for the right companies. AT&T are paying dividends. Verizon's paying dividends. Coca-Cola's paying dividends. There's a lot of companies paying dividends in the States. All right, let's have a look at this one. Okay, so this is a good question, actually. I was looking at eToro. However, someone told me the stock trade, the copy trading is up and down. Is this usually how it works? Yes. Like, you're copying someone who's invested in the stock market. The stock market will go up and down. Because you're copying someone doesn't mean that it's not going to go up and down. In fact, you're relying on that person making the best choices for you to copy, which is why when I did the copy trading video, I stressed that you need to make sure that you go for a certain caliber of person to copy. After that video, someone was saying, well, actually, even though with some of the stars, I think it was either blue stars or something like that, that eToro says that someone has to have an investment management certificate qualification, which is professional level essentially. So I was saying you want to go and pick someone like that, but your results are based on his decisions and based on the outcome of what he chose. So you have no control over it. So it is going to be up and down. There is nothing you can do when it comes to investing in the stock market that is not going to see you have the ups and downs. The question is, do you want to have control over it or not? In reality, you can't control the ups and downs of the market, but in specific copy trading, it's dependent on what the person has chosen. And you're hoping that the person makes the right call and does things and monitor things on a periodic basis, which is why you need to pay attention to the person's bio. Some of them will tell you whether they trade daily or whether they trade or rebalance quarterly or half yearly or yearly. You need to pay attention to the person's bio. Really, really pay attention to the person's bio. Someone asked me the other day if they can copy me. I'm like, no, because I'm not there to have people copy trade me. So yeah, it's going to go up and down. It is going to be usual. It will be usual for it to go up and down. Is cash effects similar to true effects? I've never heard of true effects, so I wouldn't be able to tell you. I have a few people saying, can you review this, review that, review this, and give you opinions on them. There's quite a few now, to be fair, so I have got a list of them. Maybe I'll add true effects to it, but let's put it this way. There are lots of companies popping up doing similar to what cash effects are doing. You just need to be really, really vigilant, really, really careful. Thank you for this. More likes. Thank you. We're up to about 49. If we can get it up to, actually, there's 68 of you on here. So we're very, very close. The margin's very, very slim between the likes and watches ratio. So that's good to know. If we can get it up to 50, 55, that would be fantastic, though. Thank you. All right, okay, this is a good one. I started investing in September 2020, and it's been frustrating right till now. Gain has ranged between 10 to 20 pounds. I know world economy in a bad shape, but how do people keep patience with such returns? This is a really good question, mate. So I talk about this all the time, and I put this as a section on my course specifically. You have to know the reasons why you want to invest. You have to be really, really clear on your goal. You have to be really, really clear, because when things get choppy, like they are right now, where stocks are down, remembering why you are investing will help you hold the fort. It will help you be like, okay, I know why I'm doing this. I know I'm doing this because in 10, 15 years time, I want my portfolio to be worth blah, 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 right? You need to have a really clear goal. You have to be able to anchor something. It's like Usain Bolt. Do you think that he trained all of those years, went through all of that rigorous training? Do you think he would have stayed at it if it wasn't for, I want to win the 100 meters in the fastest time possible? How much of his training regime and how much of what he went through was simply held up by the fact that he wanted to retain that title? How much of it? Because you could give up. He didn't have to do it. He was already the quickest man on the planet. He could have just been like, oh, I've had enough now. That's it. I'm not going to do this anymore. Why should I get up and do all this training and, go through all of this? It's because it's tied to something. It's tied to something that matters to him. The same thing applies for investing. You have to remember why you're in this in the first place. Is it simply to have a lot of money? Because I always find that that's not really a tangible or a realistic goal to have, because money is money at the end of the day. It's a piece of paper. It's a number on the screen. What is it there for? What is it going to help you do? What is it going to help you achieve? What is it going to deliver to you personally? If you know what that is and you're really, really clear on this, then you'll be able to keep the patience and just ride out the waves. That's the most important thing. You have to understand why you're doing it, why you're looking to invest in the first place. You have to understand that. Here we go. The other was Coinbase. So Coinbase, Coinbase, geez. So where is Coinbase right now? 1 second. Let me see if I can actually find Coinbase, because Coinbase, I mean, the first day I watched it, the first day, within the first few hours, I mean, like that thing, I think the high was like $414 or something like that. It was ridiculous. It was a parabolic increase. I actually got in and sold on a short term trade and made a little bit of money out of that. But since then, Coinbase, I mean, last week I think it was down like 40% or something like that. Let's see where it is right now. Oh my god. Right, okay. Let me just see if I can share this with you guys. 1 second. All right, okay. So this is the Coinbase price right now. So like I said, like this thing was at 414 or thereabouts on IPO day. Let's go back. Let's go a month. Let me just get the chart. Let me do the chart. And let's go out a month. Let's do lines. Thank you. So what's this? I mean, that's 342, but it was definitely at 414 on IPO day. So for it to be down at like $295, I mean, that's a huge drop. I mean, people were saying that this was going to be a volatile stock anyway. Whether it was going to be this volatile, I don't know. The question is going to be, what does the future forecast for this actually mean? And what is the future forecast for this? At the moment, I don't know. I mean, this isn't something that I would generally touch for the time being. But again, if you're doing your fundamentals, the great thing about Coinbase is, right, they are making money. They're a profitable business. They're the forefront of obviously the crypto space, and being able to access and buy cryptos. So on paper, really, really good company to invest in. I wonder whether there's a mixture of circumstances here that have driven down the price to this level. Like, to a certain extent, you got to think about where we are in terms of like the environment, inflation, low interest rates, money coming out of the market. So the stimulus checks, a lot of the stimulus checks that the people in the States have not ended up in the markets. Prior, a lot of it ended in the markets. Now with inflation possibly rising in the States, with that, they'll have the only lever that they can have to counteract that will be interest rates. With interest rates going up, if bond yields go up, it means that actually bonds become more attractive, which means that why would you go and invest money in the stock market if you can get a decent return on a bond? All these kind of things, plus the fact that actually we've got to the point where now actually for many people, it's almost like stock fatigue. They're tired of hearing about stocks. They're tired about hearing, IPOs and SPACs and all these things. I wonder there's a little bit of that built into what we're seeing here with the share price, potentially. That's me speculating, given on, what I read and what I see on a day-to-day basis. So Coinbase, tough ride. It's going to be a volatile stock. Will it get back up to $414 roughly, or over the $400? Probably not for a very, very long time. That does not mean, though, that you wouldn't be able to make a little bit of money if you buy in now at $295. The question is, will it go below? I mean, if I just have a look at, let me see if I can find what the analyst ratings or analyst sentiment for this is. 1 second. Because it must be overvalued, because it went in at a ridiculous IPO rate. I mean, over $400 was just, it was nuts. Well, let's have a look. Coinbase. I'll share this with you once I've found it. Come on, give me the stock. What's going on? Here we go. There we go. Right. So what they're saying, is it undervalued or overvalued right now? Where is it? Where is it? Okay. So let's have a look at this. I'm going to share this with you guys. And to be honest, it doesn't surprise me. It doesn't surprise me one little bit, because at the end of the day, if you think about the price that it opened at, hang on a minute. Have I got the right ticker here? I have got the right ticker here. Wow. Okay. So you just need to have a look at this, right? So at the moment, it's at $298 a share. These guys are saying that based on information that is being aggregated and fed into their platform, that a fair market value for Coinbase at the minute is $3.33. That is absolutely nuts. Tells you it's massively overvalued. And I think that is going to have a big impact on where we basically are right now. I wonder, bear me 1 second. Let's have a look at something else. I was going to do a video on this, but Stake now have a desktop app, which is great if you are looking to kind of do a little bit more research, but you don't necessarily want to have to be looking at things on your phone, because a phone screen is really, really small and it can be very, very frustrating working on a small screen. So this is analyst ratings for Coinbase within Stake. And actually, there's a lot of hold. There is still a buy sentiment within this, though. I mean, what the price targets for this? Let's have a look. So Bernstein, $250. That's 18.44% above the target at this point in time. Okay. 500. Rosenblatt, 450. Luke Capital. So these guys are saying it's a hold at 285. I mean, some of these are still ambitious though. Luke Capital, they think it's $394. 33 plus from the current price. I mean, when you're doing your research with this, guys, whatever tools that you're using, again, you've got to take this information in and try and ascertain whether you feel that it makes sense. So fundamentally, and I've not looked heavily into Coinbase, the question that I'll be asking is, number one, customer base. What is their, what their transaction levels like? How much money do they generate off the back of that? What does that actually mean for profitability? Because those are going to be the main drivers that, you know, most people are going to be looking at. But the sentiment at the moment, whilst it's massively overvalued, if you look at, you know, simply Wall Street, and they must have something wrong there. To say that the stocks only should be worth only $3.33 is just ludicrous. So if you take that with a pinch of salt and you just say, okay, you know what, it's at 298, 295 roughly at the moment, and there's a 67% buy sentiment at the moment according to the analyst ratings within Stake, and this is aggregated from a number of investment houses and research facilities, then if the buy sentiment is 67%, you need to start looking at what these targets are. So price target 450, 394. Where is it right now? There is a little bit of a gap. There's one person is, you know, this one's a hold at Bernstein, 250. So it's overvalued at this point in time. You have to take these into consideration. Again, if you're buying one of these, make sure that obviously you're putting in a portion of your money into the investment, because if any of these guys are right, and it is, you know, 394, that's almost $100 worth of growth that you can have there, almost 100 points. So could it be worth a punt? Absolutely. But for a portion of what you currently have in your investment proposition is what I would probably argue. Moving on this point specifically when it comes to Coinbase, but definitely do some further research just to make sure that you are completely comfortable with what you're going in, and try and get your hand on financials. They do have financials within this as well, but nothing's really been submitted, really, to be fair. Yeah, nothing's really been submitted. We just know that there's not a lot in there. So not really much to show you on that. Hope that helps, mate. All right, I'm conscious of the time right here because I've still got a video to do. Let's have a look and see if I can grab maybe a couple more. Right, Delight. XRP, Ripple, Coinbase. What help do you actually need? You're not specific there, so I don't know what exactly you're asking. Help in what regard? I mean, XRP, Ripple are the same thing. Ripple is the company, XRP is the coin. Then you got Coinbase, which is the platform for you to buy XRPs. Or you can, I don't know whether they actually host XRP. Actually, do they? I don't think they do on Coinbase. I could be wrong though. I don't know. Right, this is a good question. I'm going to pick one more after this. You said that the US is the place to be, but what do you think about the risk of a market crash and/or dollar value falling significantly due to problems there? I don't think that they will allow the dollar value to fall significantly to the point that it's going to hurt the economy. They just won't allow that to happen. In terms of a market crash, we are overdue a market crash. We simply are about 3 years overdue from a cyclical point of view. Typically, on a cycle, the market will crash every 10 years. We've had 12 years worth of just growth since 2007, 2008. Well, actually, no, since the last dip, we've had about 12 to 13 years. So we're way overdue a market crash. At the end of the day, a market crash will happen at some point. We don't know when that's going to be. We can't time it. We don't know what circumstances it's going to happen within. We know it's going to happen though. So the key thing is you need to be globally diversified. So if you're looking at Vanguard or any provider, you should be looking at a global fund. A global fund will probably have the most exposure to the US because most of them do. But the idea is you're going to get exposure to Europe, to Asia, to emerging markets, to Europe, to the UK, you will get exposure to different geographical regions, and you need that because it's all about, you know, not putting all of your eggs in one basket. So when I say US is the place to be, US is the place to be because it is the largest market on the planet. That does not mean invest exclusively in the US. No, it's all about diversification, stacking the odds in your favor. So you need to make sure you're looking for global exposure within any investment option that you are looking at. Just to put all of your money in the States is ridiculous. To put it all in the UK is ridiculous. To put it all in China is just ridiculous. You need to put it all over the place so you're spreading your risk. Right, let me pick one more. Right, let's have a look at this one. Okay. Hi, people. Regarding CGT, if I buy 25K of shares for 3,000 and gain 30K, if I sell a 15K portion, would I still deduct the original 3K? So I'm under the 12, even if I'm not selling all the investment. Okay. So basically your capital gains is let me just simplify this because I think you made it a little bit too overcomplicated to hear. Right. Okay. If you invest £1,000 and your shares are worth 15,000, okay, and you sell the entire position, your gain is 14,000. You take 12,300 away from 14,000. You pay capital gains tax on the remainder. Okay, so whatever you buy, you take the difference from your original investment amount to what you sell at. Now, if you're doing partial surrenders, so for example, if you're only cashing in, say, I don't know, it's worth 15K, but you're only selling 5K's worth, then no, you're realizing 5K in profit. That is below your 12,300. So you won't technically pay any capital gains tax on that amount. So that's worthwhile just bearing in mind. But again, it is HMRC ruling that you have to report any capital gains that you essentially have, and then your tax position or liability is then calculated at the point of reporting. But again, if you keep an eye on what you've cashed in at what time and when, and track it against your 12,300, you should know whether you have any tax due. If you're in doubt about your tax, speak to an accountant. I'm not an accountant, so whilst I can talk about capital gains tax, in the practicality of it, you should consult an accountant for. Hope that helps. All right. Okay, cool. All right. All right, guys, that's going to be it for today. I know there's some questions that I haven't been able to get to. Got a video coming out tomorrow, 5 p.m. So make sure you dial into that. I'm going to be talking a little bit about some of the markets and maybe some things to do. And then on Sunday, we've got Stephen from Marketplace Superheroes coming along to answer questions about Amazon FBA specifically. So if anyone that you know or anyone that you're close with has been interested in, developing a side hustle and has been thinking about Amazon FBA, doesn't really understand how it works or what they should do, Sunday's a great opportunity to ask someone who is an expert in that regard. I mean, he runs a multi-million-pound business. You wouldn't think it just listening to him. And that's one of the things that I really liked about him, is that he doesn't brag about it, because ultimately you don't need to brag about what you're doing and what you're earning if you're really doing it. And his job there, he's got a lot of free content on the channel that people can go and consume. He's there to help people. He's got a program. But if you want to ask questions, Sunday will be the time to ask questions. So please share it with anybody that you know this might be relevant to. I really do appreciate it. Can you do me a favor though? I've got on my thing on here 65 concurrent viewers. The likes at the minute are 64. Can you get me up to one more before we actually leave? Because that will be absolutely fantastic. That would be a 100% hit rate. But I appreciate, guys. I will see you tomorrow for the video and on Sunday for the live Q&A. You'll probably notice that I'm going to taper back from Instagram a little bit, because the whole thing last week was actually quite frustrating, and Instagram still have done nothing about it. So this is going to be the main way that I'm going to be interacting with you guys, doing more lives, so on and so forth. So yeah, give us a shout. Appreciate it, guys. Have a good evening, whatever it is that you're doing.